All right, we're coming into our Q&A period right over here. This is when we answer your questions that our level 1 through 4 members who are attending this have put in. We're going to do our best to answer a whole bunch of them. Some of the requests I see out there are out of our universe of analysis, so we won't be able to answer those. I'm going to start out by answering some of the questions on the futures. As far as the stock market goes, I'm not going to take any of those now because I'm going to do a stock market presentation after this. So I won't be answering any stock market questions right now. The equity and ETFs, Katie's going to handle after that. So Katie, you'll have a list of things that you're going to cover. Then I think I'll probably do about 5, and Katie, maybe you'll do about the same if you have that many to do. And then we'll have to cut it off at that point because we're going to be running way long. So let me just take some of these questions in here that don't have to look at charts really quickly. Ray is asking, when will the big picture of the stock market be? I always do that around the beginning of the year and at around mid-year. So that's what is my intention. Generally, if there's something very unusual that happens, I'll do a special one. But being that the market's pretty much followed our analysis, there's no real reason for me to do anything until around the end of the year. Walter, you're asking about light crude. You're asking, do you see further downside movement in WTI, West Texas International, because it moved down at the beginning of the show. I talked about that and said that I thought it's going to move down pretty sharply after a rebound to over 80, maybe to about 80, but I still think that the pattern is quite negative. Jeff says he recently transitioned to Thinkorswim platform. That's great. How do I get charts on the platform? Well, in order to get live charts on Thinkorswim, which is where we do all of our work, you would need to become a level 4 member. The Charts Hub, which was demoed by Matt earlier on the show, shows you how you can get static versions of them. But if you want to have them live, you need to be a level 4 member. And that you can get if you're not, you can get a special on that by writing to Matt at askSlim.com. The Charts Hub are, every time there's an update, Roger, in the Charts Hub, then our staff grabs those and then loads them into that. It's usually done in some matter of hours. So I hope that's clear. We don't wait too long in there, just a matter of the staff getting to it. Okay, so we have some questions in here on gold, bonds, copper. Gold, bonds, copper, and Bitcoin. And that's what I'm going to do, those 4 right now. So let me switch over to the charts. And we'll look at the gold market. Now, the gold market analysis was updated just a little while ago. This has not been updated to our members yet because I just did it as things were changing just before this show. So let's just look at the weekly first. And for the intermediate pattern, this is extremely bullish. Now, right now, you can see it's getting down to the first level of support over here. And it's fairly likely, with the momentum having turned up right over here and the cycle lows looking like right over here, that once a correction is over with, this is going to be moving up again. It could not get through that important 78.6, which is at around 20.25, 20.30. If it did, then it would likely test the all-time high, and we are looking for that or even higher into next year. It does have to hold these supports right over here, and it would be nice if it didn't get below 1900, but still we're in a corrective period right there. When you look at the daily chart, now this is really where the update has come. We were projecting the likelihood that this would bottom in here on the minor cycle and then move up again to a higher high. But you could see that did not happen. And this is called a left-hand translation. That means that this next minor cycle peaked very early on the left side of this, and you learn that in the cycle analysis workshop. And then if that happens and it gets underneath that low, then it says that it likely will continue the correction through this period right over here. Also, the dominant cycle says that it's likely to come down over there also. Now, the key is that this period right over here is what's known as the period of risk. And I'm just going to grab this right over here. And that's what these yellow areas are, where the biggest corrections come. It's important, as you see right over here, you see where each of these periods of correction are and the cycles coming down, multiple cycles pushing down, that it does not get underneath here, or certainly not under the 78.6, which is probably right around 1870, 1865. We want it to correct in here and hold in these areas and then set up the next rising phases over here, which, going back to the weekly, would take you out to a rally out over here into December, where it then probably meets into more correction there. So this looks like it's potentially a choppy period out over here, with the most favorable period in January, February, and that would align up over here with a cycle that's even beyond the one that you're looking at here. So this is not good. The momentum was lost. You can see that where it was positive here, but not really be able to put much on, and then turned on the slim ribbon PO as neutral, the slim ribbon rolling over and turning to neutral. And that says the next 2 weeks are a problem for the gold market. And we really wanted to hold in these supports to confirm the overall very bullish scenario that we see in this bigger picture. I'm just going to go out over here. And this rally that you see right over here is only 3 weeks old. And you could see these rising phases last for months in there. So not likely that this is a peak, much more likely it's going to fall for a couple of weeks and then turn back to the upside. So that's a look at the gold market. ZB is the next one that was requested. And you can see in here that we were positive on the bond market. I still have these colored phasing in there in the bond market. And that shows you that this rising phase, that's the slightly shifted cycle right over there. And it came to the first resistance level right over here around 114.30. We're projecting it to get up to 117.5 to about close to 120 up there, but really 117.5 is what makes the most sense. And early in the show, I talked about what I thought was a period where interest rates were going to go up again into the March-April period. That's this right over here. I think that this area of resistance is going to be a failure, and that rates are going to go up again over here, which is not what most of the market participants believe. Here you have the cycle periods, and here you're rallying right now. These are the resistances from the weekly, and this is that 117.5 number right over there that we kind of think it's going to get back to. Now, this right over there, that is an engulfing pattern, and that is a warning in here. If you do candlesticks, that it potentially has reached a level that's going to be a problem for it. It's important to consider that also. So see this 10-year, this message right over there, the 10-year yield trough. In other words, the low in the 10-year yields, which are moving down now, is likely to come around December 1st, which is plus or minus maybe 3-4 days. That's why we're looking for the bond market to hold up into that. But then I look for yields to go back up after that period. So that is a look at the bond market analysis, the bigger picture on the left on the weekly, the short-term picture on the right. Copper is the next thing that we were asked for, /HG in the copper market. These are all things that we keep updated all of the time. And again, if you don't want to be a level 4 member and get them live on Thinkorswim, become a level 2 or 3 member, and you'll be able to get those in the charts hubs that we have. This is a look at copper, and you could see it made a low right about the timing it should. The ideal low in there was around early November, and it made a low just a week early. It gave you this morning star pattern, rallied, and now is pulling down. You can see that. But really, this looks like it should be making a low there. If it goes down one more time, if it did it right now, I guess it would be acceptable. But overall, looking at this pattern on copper right over here, this does look like, as we said in gold and silver, it has about another week to go before, or 2 weeks, before it then gets into a period where it could move up right over there. So it needs to hold that important level right over there. I'm just going to grab this so you can see where that is. And that's that low right there. So it needs to hold above that. If it gets below that, well, that's a lot of trouble. We'll look for a couple of weeks of back and fill in here and choppiness, and then turning up again. We do not want to see it get under that low at 352. That would be a really bad thing. So that's a look at the copper market. The last thing I'm going to look at is Bitcoin on these requests, /BTC. Bitcoin is surging on the upside. Let's look at the weekly first. And you can see in here that it has gotten up and stalling around that 161.8% fib extension that comes off of this previous cycle. The next resistance is up here at 42,300. And it is possible that it is headed over there because there are a lot of buyers in this market. Look where the momentum turned up right over here using the reversal scout. Remember, this is a level 4 study. You need to have the level 4 and be on Thinkorswim to run this. And this is where the cycle turned up. And this shifted. It was early. You can see right over there. This is the old cycle. And that told us about that low right there, and the momentum is still very strong. Here, when I look at the short term, this is what's called swamped. What does that mean? Well, this is the ETH right over here. Ethereum, this is Bitcoin. This was supposed to have a correction right in here, but it didn't. It still might have a couple days down, but it might have just been this sideways correction and headed up again. And that's why we're pointing up to that 4,200, because the energy from these more dominant cycles are super strong. And it's very reasonable to see this thing move to that level at 42,300, no matter how bullish or bearish anybody is. And I tend to not love cryptocurrencies as a whole. We're agnostic, and this is a bullish scenario when we look at this, and I'm not afraid to say it. I mean, it does look super good looking at the Bitcoin market. That's all of the futures I'm going to look at. Katie, you have a few of these ETFs and equities that you're going to look at, and I'll hand this over to you.
Okay, sounds good. We just have about 4 or 5.
Okay.
And let me know when you can see the weekly chart of Tesla.
Got it.
Okay, great. So we talked about this one a little bit earlier in the show. This was a positively configured cycle. It was looking really good. Didn't even get down into those lower support zones. Positively configured cycle, meaning it ends higher than where it began. It formed a cycle low right here, started to move up, got to that 78.6% fib retracement level that was formed from this high and that low, and backed off from there, was still okay until this candle on earnings. And then we broke below the cycle low support. So now we're coming up out of this mid-cycle timing period, minor cycle here, and we have a resistance zone here, minor resistance zone, and we would expect this zone to hold before making another move down into the timing period for this dominant cycle. That timing period is, let's see, January 14th to February 25th. We have a target zone here. This would be the 100% fib extension. It's already almost gotten there. So conservatively, we would project a retest of that, and then our next level down would be the 127.2% fib extension. If we switch over to the daily chart and we zoom in, you can see that that price action. This was a negatively configured cycle ending lower than where it began. And so we would project the next cycle to not take out the high. And that's what happened. It stalled at the short-term 78.6% fib. But then this one configured positively. So we would have expected it to be able to make a new high. I guess it got like a very slightly below there, but it did stall at those key levels. You have to keep an eye on them. The 78.6% fib broke through that cycle low support. So on the short term, we have this minor resistance zone in these pink boxes here, got up into there, backing off from there. We do have a daily cycle timing window from November 17th to November 29th. So we are looking for further downside, perhaps a retest of that recent low. So that is Tesla. Now let's go back to SMH, which is the semiconductor ETF. Oops. Get rid of that and zoom in so you can see better. This is a very positive look. Positively configured cycle, positively configured cycle. It ended just last week and moving up now very sharply through the 78.6% fib and heading for that prior cycle peak at 161.17. If it gets through there, we would project to, that's basically the same as the prior cycle peak. We have these further extension areas up here between about 169.5 and 178, 179. So that's kind of the more intermediate look. Over on the daily chart, we formed that intermediate low here. This is the one that corresponds to that, and moving up sharply, as you can see, through this short-term cycle peak, and now getting up into that towards that intermediate cycle peak. So this cycle, how would we project if it gets through there? Then maybe 159 to 165, somewhere in this area, it might hold. And then we have a daily cycle timing window coming out in mid-December. So this still looks good. Positive momentum with a green reversal scout and positive slim ribbon. So this could be a potential buying opportunity on a pullback as long as it didn't come back too far. So that is SMH. Let's go over to NVIDIA. NVIDIA looks very similar to this. Just 1 week off that low. These track very close to each other. So very similar. We're through that 78.6% fib. We've had the upturn in momentum now, which helps us to confirm the cycle lows. And we have these levels up here, 50% fib extension level at 533.35 and the 61.8 at 566. Over on the daily chart, there is the low that corresponds to the intermediate low through this prior cycle peak already. So we need to project a little bit higher. 498,500 would be reasonable. We have we have earnings coming up, first of all. And second of all, we have a daily cycle timing window towards the end of this month, beginning of next month. So this one you would need to be cautious just because of earnings. But if you wanted to avoid that, you could trade SMH. It trades very similarly. Next is Broadcom. This one is a little bit different. So we made this, it's a very strong move up here after this positively configured cycle. Then we had this period of consolidation. This corresponds to this minor cycle trough down here. Now we have this, this is SMH overlaid on this chart, and then the black cycle brackets are Broadcom. So made this minor cycle low and now moving up again, perhaps to get up as high as 984. That would be the 161.8% fib extension. Now this one does have a different timing window coming out 12/11 to 2/6. So we would expect probably this area to hold, and then this is very positively configured. So some, small retracement, we wouldn't expect it to really retrace too much farther than the support zones before possibly moving up again in line with the rest of the semiconductor market. Over on the daily chart, we are just at the top of this target zone. So we would need to do another draw with the fib extension tool to project higher. and that would be 984.74 is the next level up, with a daily cycle timing window coming up at the end of November, beginning of December. The other charts that were requested, Daniel, Nokia, and CLSK, I do not have updated analysis on those, but as a level 4 member, if you will send me your email, or you can send it to team@askSlim.com, we will be happy to work up those charts for you and send them over to you.
Right, absolutely great work. Just love the way you presented all of that. So thank you, Katie.
Sure.
All right, so I'm about to move forward. I want to show you right now where you can get more of our information. You can go over here for the new day trader service, which is live. Just click that sign up button, only $24.50 a month. Or if you want to see our cycle analysis workshop special, click that learn more button over there.